Trading support and resistance on its own is one thing, but combining it with multiple confluences turns low probability setups into high probability setups. In this video, I'm going to be showing you the best confluences you guys can use to help you identify the best setups in support and resistance zones. Now, this is a follow-up on the previous video where I went into detail on how to identify and physically mark up your support and resistance zones properly. So if you guys haven't seen that video yet, I would highly recommend going to check it out before watching this one. It'll make a lot more sense, and yeah, so the link is in the description below to that video, or you can head over to my channel and you'll find the video there. But this video is taking it to the next level, which is looking for trading setups in the support and resistance zones. Now, I've handpicked a few simple confluences that you guys can look for in the support and resistance zones that will help you identify great trading opportunities. Just to inform you guys, I've not picked out these super complex, insane concepts that nobody understands. I've picked out 3 very simple yet effective confluences that most people know, understand, and can apply to give you that edge. And we'll be taking a look at each concept individually and how you can start using them to trade off these support and resistance zones. So let's get into it. So before we get into the confluences, we need to establish the time frames we'll be using to look for entries, as well as the time duration of each trade. And the time duration of each trade will be determined by the time frames we'll be using to look for entries. Okay, so the main 3 time frames that we use to mark up our support and resistance zones are the hourly, the 15-minute, and the 5-minute time frames, which we did confirm in the previous video. A reminder, go and check it out. Okay. Now, if you're marking up your support and resistance zones on the hourly time frame, you want to be dropping down to the 5-minute time frame to look for entries in those support and resistance zones. All right. And if you're marking up your support and resistance zones on the 15-minute time frame, you want to drop down to the 2-minute time frame to look for entries in those support and resistance zones. And if you're marking up your support and resistance zones on the 5-minute time frame, you want to drop down to the 1-minute time frame to look for entries in those support and resistance zones. Dropping down to lower time frames to look for entries allows you to get in early when price reacts off these support and resistance zones. I mean, you don't want to be late to the party, right? You want to be nice and early. You want to be catching those big moves, those big reactions, nice and early. That's what it's all about. And what about the time duration? What about the trade duration? If you are looking for entries on the 5-minute time frame, which means that you marked up your support and resistance on the hourly, you want to be looking for a 10 to 25-minute trade duration, anywhere between 10 to 25 minutes. Okay. And if you're on the 2-minute time frame looking for entries, which means that you marked up your support and resistance on the 15-minute time frame, you want to be looking for a 4 to 10-minute trade duration. All right? 4 to 10 minutes. And if you're on the 1-minute time frame looking for entries, which means that you marked up your support and resistance on the 5-minute time frame, you want to be looking for a 2 to 5 minute trade duration, anywhere between 2 to 5 minutes. And just to make things easier for you guys, because I'm nice, I've gone ahead and created an illustration, a chart, which I've just put before you guys, which shows you guys the time frames for the entries as well as the trade durations. So go ahead and screenshot it, save it to your gallery, memorize it, so that you guys know which time frames to use for entries and the trade durations. I mean, it'll only help you. Okay, so the first concept or confluence that we're going to be taking a look at here is price action. Now, I'm sure a lot of you are familiar with price action, and funny enough, not too long ago, I created a video on price action, going into detail about the only two candles you need when trading binary options, the two most important candles on your charts. Well, types of candles to be exact, which we'll be getting into in just a moment. But if you guys haven't seen that video yet, before we continue here, I would highly recommend that you go and check that out. Okay, it will only expand your knowledge, it'll only help you. So the link will be in the description to that video, the only two candles you need when trading binary options. Or you can just head over to my channel and you will find the video there. Now, combining and applying price action with high probability zones, aka support and resistance, you're able to find some incredible trading opportunities. So what are these special important candles I'm talking about here? Well, it's engulfing and rejection candles. And what these candles tell us is who's in control, the buyers or the sellers. And with this information, we're able to make rational decisions on the charts. Just to jog your memory, I'm going to demonstrate a few examples here. Okay, let's get into some engulfing candles. Here we have a support zone. I'm just going to use this area here, it's a clean area, just to show you guys some examples of what I'm talking about. Okay, so in the support zone, we have this candle that's formed here. We have a bearish candle like that. It's not going to be perfect, but it'll do. Something like that, right? Then the next candle that forms looks something like that, okay? This is a prime example of a bullish engulfing candle. Why? Simply because this candle here closed above the high of the previous candle, ultimately engulfing it, telling us that there is buyer dominance. And in a support zone, this is a candle that we want to be entering in off of. Because, like I mentioned, there's buyer dominance. Price is most likely going to continue moving up. It doesn't matter what the candle looks like, because candles come in all sorts of shapes and sizes. But the most important thing here is that the candle engulfs the previous candle by closing above it. And this would be a confirmation for us to go ahead and open a buy position in a support zone. And in a resistance zone, it is more or less the same thing, just the opposite. So if I go ahead and mark out a resistance zone up here, an imaginary resistance zone, we have a bullish candle here, something like that. And then the following candle that forms is a candle like this. And this right here is a great example of a bearish engulfing candle, okay? Because this red candle here engulfed the previous candle by closing, breaking and closing below the low of the previous candle, telling us that there is seller dominance. The sellers have taken control, they're driving price down, and this right here is an indication that price is most likely going to continue moving to the downside. Keep in mind, when I talk about a closure below the previous candle, I'm not talking about a wick below. I'm talking about a firm closure, okay? And a firm closure is formed by the body of the candle. So the body of the candle needs to form below the low of the previous candle. And once that bearish engulfing candle has formed in or off the resistance zone, it doesn't really matter, this is the confirmation we want to open a sell position. So that covers engulfing candles. Now, what about rejection candles? Let's get into some examples of rejection candles. So here we have a support zone, okay? Just going to go ahead and mark up a rejection candle here. So we have a body, a wick, and a wick. This here is an example of a bullish rejection candle. Sellers tried to drive price down, but then buyers swiftly took control, driving the price back up, forming this long lower wick. And this long lower wick forms the bullish rejection candle. Okay, now the color of the candle doesn't actually matter. It can be red or green. What makes the bullish rejection candle is the long lower wick. Now the funny thing is, right, you have all sorts of crazy names for rejection candles. A pin bar, a hammer, a shooting star, a doji. I mean, I've probably missed a few there, but that doesn't actually matter. Okay, what matters is this is a rejection candle. Okay, and rejection candles come in all sorts of shapes and sizes, different body and wick lengths. But the most important thing here is that you know how to identify it. So once the bullish rejection candle has formed in the support zone, this tells us that there's buyer dominance. So the price is most likely going to continue moving to the upside. So once the candle has formed, this is a confirmation to us to go ahead and open a buy position. It's very aggressive, I know, but that's the price action approach. Now, what about resistance zones? Okay, we know that in resistance zones, we're automatically looking for sells. So here we have a body, an upper wick, and a lower wick. Now, this right here is a great example of a bearish rejection candle. And once again, the color of a bearish rejection candle can be red or green. But what makes this a bearish rejection candle is the buyers try to drive the price higher, but then the seller stepped in, driving the price down, telling us that the sellers are dominant, forming this long upper wick. We know with this information that the sellers are now in control. So once this candle has formed, it's very likely that the price is going to continue to drop to the downside. So the closure of a bearish rejection candle in or near a resistance zone is a confirmation to us to go ahead and open a sell position. I mean, rejection and engulfing candles are incredible because it tells you who's in control. And as traders, it's so important that we know who's in control of the market. Now, if you guys want to learn more about these candles, like I said, I've created a video where I go into depth about each of these candles individually. So I highly recommend that you go and check it out. Do it for your sake. It'll only help you. And these candles right here will be the candles that we'll be using for price action entries of support and resistance zones. Okay, so I think it's time to get into some examples here of how we can apply price action in support and resistance zones. I'm on the 5-minute time frame right now. We're looking at the CHF JPY pair. And all I'm going to do is just scroll back to a random place on the chart. This looks like a pretty good area here. So I'm just going to go ahead and mark up a support zone. So I think we'll take a look at some support zones first before we get into resistance. Okay, but here, this is a very nice area, a great example of a support zone that I've just gone ahead and marked out here. Okay, because price has reacted from this area 4 times. Okay, 1, 2, 3, 4. Just make that clear to you guys. 1, 2, 3, 4. A sweet example of a support zone. A reminder, your zones will never be perfect because all it is at the end of the day is an area, or an estimated area, I should say, where price has previously reacted from. This support zone that I've marked out is not perfect. It's just an estimated area where price has previously reacted from, because price will react from support and resistance zones in many kind of ways. In this situation here, on the fourth occasion that we got a drop into the support zone, we broke slightly below it. But at the same time, it still reacted from this estimated area, respecting the support zone by pushing back to the upside. Okay, the only time that this becomes a valid support break is if we get a strong drop to the downside with multiple red consecutive candles and that continuation of bearish market structure. So in this situation, all we have to do is make a small adjustment to accommodate the new bounce, now covering the main area where price has previously reacted from. And this stuff becomes easier with experience. Now, if this stuff is foreign to you and you don't have a Scooby as to what's going on here, once again, I recommend that you go and watch my previous video. I go into a lot more detail about this stuff. So go and check it out. Okay, so we've just marked up the support zone on the 5-minute time frame. So what I'm going to do now is jump over to the 1-minute time frame, scroll back, and look at where we could have entered some buy positions off the support zone. There we are. So this is the support zone we marked up on the 5-minute time frame. And here we have the first bounce, second, third, and fourth. Just to point it out to you guys. And in a support zone, we're looking to enter buy positions of two types of candles. One or the other. A bullish engulfing candle or a bullish rejection candle. And realistically, we'd start looking for buys off the third retest of the support zone, which would be right over here. Okay. And immediately you'll notice that price dropped down into the support zone. Okay. And we form this bullish rejection candle. Okay. We have a long lower wick. And we have a small body. That is the character. Those are two characteristics of a bullish rejection candle. So in this situation, we'd be entering a 3 or 4 minute buy position off the closure of this bullish rejection candle. And the trade would have closed 1, 2, 3, 4, would have closed on one of these two candles here. And this would have been a beautiful trade. And this here is a great example of entering a buy position off of a bullish rejection candle in a support zone. Let's take a look at another example here. So the first trade we took was beautiful, right? The third bounce off the support zone, price pushes to the upside, and then proceeds to drop back to the downside, retesting the support zone on the fourth occasion. And you'll notice that this time price ended up dropping below the lows we have here. But obviously price swiftly reversed back to the upside. And you'll notice that with this push back to the upside, all of a sudden we got a bullish engulfing candle right here. A beautiful bullish engulfing candle. A long green body with little to no wicks. And what makes this a bullish engulfing candle is the fact that this candle engulfed the previous candle by pushing and closing above it. So on this candle closure, we could have gone ahead and opened a 4 or 5 minute buy position, and the trade would have closed, what, 1, 2, 3, 4, somewhere up here. And once again, another beautiful trade. A great example of opening a buy position off of a bullish engulfing candle closure in a support zone. Just a little tip here. You don't necessarily have to wait for a candle closure within the zone that you've marked out. You may find that sometimes you get a bullish engulfing or rejection candle forming slightly above the zone, maybe slightly below it, sometimes within. As long as it's more or less within the estimated area that you've marked out. You don't want it to be all the way up here or way below the zone. No, that's something you want to avoid doing. Now, this is just a little change of scenery here. I switched up the asset and I went ahead and marked up the support zone on the hourly time frame. Okay, we have 1 touch, 2 touch, 3 touch, 4 touch. 4 reactions off this support zone. So it's a pretty sturdy support zone. Now, what I'm going to do is jump over to the 5-minute time frame, and we're going to go back and look at where we could have opened some potential buy positions. Okay, so let's scroll back here. This looks like the 3rd retest of this support zone here. So we're going to look for some buys. Price drops into the zone, and right here we get a bullish engulfing candle. Beautiful. Okay. We just zoom in here real quick. This is a valid bullish engulfing candle because we have a long green body with little to no wicks, and most importantly, this candle engulfs the previous candle. So on this candle closure, we could have opened a 15 or a 20-minute buy position, and the trade would have closed somewhere over here. Simple, right? And so if we zoom out, you can see price pushed to the upside just a little bit until eventually it dropped back down into the support zone, retesting it for the 4th time. So what are we going to do? We're going to look for some buys. If we zoom in here, you'll notice price drops into the support zone, consolidates a little bit, no bullish rejection candles, no bullish engulfing candles. Price proceeds to drop, ends up dropping slightly below the support zone we marked out, but it's fine because it still remains within the estimated area that we marked out. And then all of a sudden, we get a bullish engulfing candle. This candle right here. And you're probably wondering, is this really a bullish engulfing candle? And the truth is, yes. Because this candle here engulfed the previous candle. It broke and closed above it, making it a valid bullish engulfing candle. So we could have entered a 20 or a 25-minute buy position on this candle closure here, and the trade would have closed somewhere up here. Another glorious trading opportunity. I just skimmed through that real quick because you guys get the idea. In a support zone, you're looking for a bullish rejection candle or a bullish engulfing candle to form. In other words, using price action to open trades in a support zone. It's that simple. So next up, we're going to take a look at how we can take sells off resistance zones. We just got into some examples of how we can take buys off support zones using price action. Right now, we're on the 15-minute time frame looking at CAD JPY, and in no time, I've identified this resistance zone up here. Okay, we've got 3 touches, 3 rejections off this area here, making it a valid resistance zone. Okay, we got the first rejection, 2nd rejection, 3rd rejection, 3 bounces, making this a firm resistance zone. And always remember that with support and resistance zones, you need at least 2 rejections, 2 reactions off a specific area to make it a valid zone. All right. So because we're on the 15-minute time frame, what I'm going to do now is jump over to the 2-minute time frame to look for some sell entries off this resistance zone. So we're just scrolling back here, and this is the resistance zone that we just marked out on the 15-minute time frame. Okay, so you can clearly see that this was the first reaction, 2nd reaction, 3rd reaction off this zone. Okay. Now, because we're looking for sells off this resistance zone, there are 2 types of candles we'll be looking for. Okay, the first type of candle will be a bearish rejection candle, and the second type of candle we'll be looking for would be a bearish engulfing candle. Okay, unlike the support zone where we're taking buys, we'd be looking for a bullish rejection candle or a bullish engulfing candle. Here it's the opposite. Okay, so naturally, these are the first 2 touches here, so we wouldn't be taking sells off this zone. On the 3rd occasion that price pushes up into this resistance zone, this is where we'd start looking for potential selling opportunities. So if we zoom in here real quick, we're looking for a bearish rejection candle or a bearish engulfing candle. Okay. And right over here, we have a clear bearish engulfing candle. Okay, we have a long red body with little to no wicks, and of course, this candle right here engulfs the previous candle. So this is a valid bearish engulfing candle, and this would be a confirmation to us to go ahead and open a sell position. So because we're on the 2-minute time frame, we could have taken a 6, 8, maybe 10-minute sell position off the closure of this candle. And as you can see, the trade would have played out very nicely. And just to point something out here real quick, this candle right here, I'm sure some of you are curious to know whether this is a valid rejection candle or not. And it's not really a valid rejection candle, simply because the lengths of the wicks are more or less the same. Okay, the upper wick is more or less the same length as the lower wick, and because you have this centered body closure, this tells us that there's a balance between buyers and sellers. Okay, and this only becomes a valid bearish rejection candle when you have a longer upper wick with a smaller lower wick. And I would have been far more confident to take a sell position off a candle like that, simply because we would know that there is seller dominance. Let's get into another example here. We're back on the 5-minute time frame, and if we look over here to the left, we've got a juicy resistance zone. Just going to go ahead and mark it out, grab the rectangle, and there it is. Okay, this is a valid resistance zone. We've got multiple rejections, 1, 2, 3, and we didn't really react here, but we'll get into that in just a minute. But we have multiple reactions off this area, so that means we can now drop to the 1-minute time frame to look for some potential selling opportunities. Okay, so this is where we marked up our resistance zone. This was the first reaction, second reaction, and if we move over to the right, this was the third retest of the resistance zone. And then here, obviously this was the fourth occasion that price pushed up into the resistance zone, but of course, we did get a resistance break right here, which we will get into in just a moment. So let's zoom in here real quick. This was the third retest of this resistance zone, okay? So on the third retest, this is where we'd start looking for selling opportunities. So price pushes up into the resistance zone, and immediately you notice this beautiful, gorgeous, bearish engulfing candle. Okay, we have a long red body with little to no wicks, and of course, most importantly, it engulfs the previous candle. Okay, so on the candle closure, we could have locked in a 2, 3, 4, 5-minute sell position, and the trade would have played out very, very nicely. Now, what about the fourth retest? This is an interesting one. Okay, so price ended up dropping to the downside, and then on the fourth occasion, it rose back up into this resistance zone. And naturally, what are we going to do? We're going to look for sells, right? So price pushes up, and as you can see, it doesn't push a lot higher above our resistance zone that we marked out. Okay, so in this case, we know that, hey, the zone looks like it's being respected, okay? The candles are getting smaller as it's going up, and immediately, you notice we get this bearish engulfing candle here. Okay, this is a valid bearish engulfing candle because it engulfs the previous candle. So we could have opened a sell position right there. But keep in mind that had we opened a 2 or 3 minute sell position, the trade would have not played out, okay? Because had we opened a 2-minute or 3-minute sell position on this candle closure, the trade would have closed on one of these two candles here, and it wouldn't have played out. We would have had to open a 4 or 5-minute sell position. So when it comes to opening trades on the 1-minute time frame, I do recommend sticking to 4 to 5-minute sell positions because it gives the price enough time to move, to react, and that's ideally what you want. 2-3 minutes is a little bit quick. It's a bit short, okay? But let's just say that you missed this opportunity, okay? You could have opened a sell position on this candle here. This is another opportunity to have got in on this setup, okay? This was a bearish engulfing candle that formed because we engulfed the previous candle. So on the candle closure, we could have opened a 2, 3, 4, 5-minute sell position and the trade would have played out. If you think about it, this was actually a 50-50 shot. The reason being is you could have looked at it from two perspectives. The first perspective is, hey, yes, price pushed slightly above the zone that we marked out, but it still remains, price still remains within the estimated area. Okay? So therefore, it's still a valid selling opportunity. But some of you may have looked at it from this point of view, where price moved slightly above the zone we marked out and that bullish structure continued. It's clear as day. So some of you may have argued that because that bullish structure continued, I'm not going to take sells. It was a 50-50 shot. But me personally, I would have still taken the trades, simply because the price still remains within the estimated area. It's not moved significantly above the zone we've marked out. So I would have still taken a sell of this candle or of this candle. But if you look at the grand scheme of things, this resistance zone was broken, and that's clear. Now what happens to a broken resistance zone? What happens to this zone? This zone now becomes support, the basic principles of support and resistance. And I go into detail about this stuff in my previous video. Look, what I'm getting at here is support and resistance zones aren't always respected. Support and resistance zones get broken all the time, especially on lower time frames like the 5-minute time frame. Okay, and there will be times where you will lose trades. Okay, because losing is part of trading. It's a reality. Support and resistance zones are high probability areas, skewing odds in your favor. So when you combine it with something like price action, it gives you high probability setups in these zones that you can take trades off of. A reminder, there are no guarantees in the market. No guarantees. So marking up your support and resistance zones properly and applying price action the right way will allow you to win more trades than you lose. But again, losing is inevitable, and it's down to you how you manage those losses. That's why risk management and controlling your emotions is so important when it comes to trading. So that covers price action and how to use price action to open trades off support and resistance zones. Next up, we're going to take a look at the second confluence, which is breaks of structure. Let's get into it. Alrighty, so the next confluence we're going to be taking a look at here is a break of structure. Now, what is a break of structure? To put it in broad terms, a break of structure is when a currency pair moves past a high or a low, signaling that there is a continuation of the trend. So just to explain to you guys what I'm talking about here, I'm just going to go ahead and use this area we have here to show you guys what I'm talking about. So let's say the market is moving in a downtrend, forming lower lows and lower highs. This here is a clear and evident downtrend. Okay, a break of structure occurs when we get a break below the most recent low. So in this swing over here, this right here would be a break of structure. On this swing, we get a break below here. This would be a break of structure. And the same thing applies over here. Okay, so I've gone ahead and marked up these imaginary candles we have here just to show you guys what this would look like on the charts. Now, it's clear as day, we're in a downtrend. Price is forming lower lows and lower highs. And in a downtrend, a break of structure occurs when price breaks below the most recent low. Following structure here, we get a drop. Then price forms a lower high, and just a side note, a lower high can be formed with a minimum of one green candle closure. It can be multiple, but only a minimum of one green candle closure is required to form a lower high. So we get a lower high right over here. And to get that continuation of bearish market structure, we would need to see a break below the most recent low, which would be over here. Now, the following candle that forms, we get a break and closure below the most recent low, forming a lower low. Then price proceeds to push back to the upside, forming another lower high. And to get that continuation of bearish market structure, we would need to see a break below the most recent lower low, which would be over here. And if you look closely, okay, we get a break below the most recent lower low over here. Price wicks below it, but closes above it. This still counts as a break of structure because we still got a clear break. As long as the candle closes red, this is a valid break of structure. Doesn't need to be a candle closure, okay? So we got that break of structure and continuation to the downside. So we can establish that this is bearish market structure. But what would happen if price broke above the most recent high? What would happen? Well, this would indicate a market structure shift into potential bullish market structure. And the appropriate name, or the right terminology for something like this, would be a change of character. Okay, this still remains a break of structure, but if we're being more specific, this would be a change of character. Now, because we're just going over the basics in this video, we're just going to keep things simple and we'll be sticking to a break of structure. We're not going to get too technical. If you guys want to learn more about break of structure and change of character, I've created an individual video going into fine detail about this stuff. So if you have no clue what I'm talking about here or want to learn more, I highly recommend that you guys go and watch that video. The link will be in the description below, or you can find the video on my channel. So we just covered what a break of structure would look like in a downtrend. Now, what would a break of structure look like in an uptrend? In an uptrend, price forms higher highs and higher lows. Okay, this is a clear uptrend. Now, a break of structure occurs when price breaks above the most recent high. So here we have a swing to the upside. Price breaks above this high, forming a new higher high. This is a break of structure. Okay, once again, price forms a new high, pushes past the previous high, forming a new high. This here is a valid break of structure. And the same thing happens here. These are all valid breaks of structure. Okay, so I've gone ahead and marked up some candles here, and we can see that this is clear bullish market structure. Price is forming higher highs and higher lows. Now, in an uptrend, a break of structure occurs when price breaks above the most recent high. So, if we follow structure here, price pushes to the upside, then we get a pullback, forming a higher low. Okay. Price then needs to break above the most recent high for it to be a valid break of structure. So the following candle that forms, we get a break and a closure above the most recent high, forming a higher high. The same thing happens here. We get a small pullback with price forming a higher low. And then here, the following candle that forms, we get a wick, a break above the most recent high with a green candle closure, telling us that this is a valid break of structure, and then a continuation to the upside respecting that bullish momentum. Now, in this situation, a change of character would occur if price broke below the most recent low. Okay, here we have the most recent low. If price broke below it, this would be a valid change of character because we got that market structure shift into potential bearish market structure. In simple terms, this is still a break of structure. At the end of the day, you guys get the idea. Okay, so now that we've covered the basics of breaks of structure and in brackets, change of character, what we're going to do now is get into some examples of how we can apply breaks of structure in support and resistance zones. So let's get into it. So I've gone ahead and marked up this zone we have here, which is an area of interest. Price reacted from this area on multiple occasions, forming this sturdy resistance zone. And on the third occasion that price pushed up into the zone, it broke right through it cleanly with these strong bullish engulfing candles. And what happens to a broken resistance zone? It now becomes support. So after the clean break, price pulled back down to the former resistance zone, now support, bounced to the upside, pulled back, reacted from this area once again, pushing back to the upside, pulling back into the support zone before pushing back to the upside. So this is a zone, okay, this support zone / area of interest is an area where we could look for some potential buys on the 5-minute time frame. Remember, we're on the hourly time frame. So the 5-minute time frame is the go-to to look for potential buy entries off this support zone. Now, I've just switched over to the 5-minute time frame, and I just want to point something out here for you guys. This was the third occasion that price pushed up into the resistance zone. And as you can see, no signs of any reversals. Okay, and that's why confluences like this protect you against low probability setups like this. Okay, no signs of any reversals. Price just continued pushing up following that bullish market structure. A clean break. If we switch over back to the right, as you can see, we eventually got a pullback back down into this area. So we can establish that this here is the first retest of this broken resistance, now support zone. So we'll be looking for a break of structure to the upside, and off that break of structure, we'll look for potential buying opportunities. So let's see what we can find. Now, if we look over to the left, as you can see, market structure was bearish, dropping into the zone, forming lower lows and lower highs. Okay, and we're looking for a break of structure to the upside, a market structure shift, that change of character, which will be a confirmation to us to go ahead and open a buy position. Now, if I zoom in here real quick, this over here was a break of structure. Okay, but there's a reason why I wouldn't have taken this trade. Okay, we get a high, we get a higher low, and here we get a higher high. So on this candle here, we got a break of structure. Okay, the candle broke above the most recent high, and the candle closed green. But the reason why I wouldn't have taken a buy position here is because, as you can see, price barely dropped into the zone. Had I seen a deeper drop into the zone, maybe somewhere down here, I would have confidently opened a buy position there. But we didn't. So, therefore, I would have sort of ignored this. This here is a clean change of character. Clean. But it becomes invalid when we don't get that deeper drop, that deeper retest into the support zone. Zooming out here real quick, we eventually got that drop deeper into the support zone. But if we go and break it down real quick, you'll notice if we take it from the top, we got that change of character up here. And obviously we wouldn't have taken a position here because we didn't really get a firm retest of the support zone. So this was cancelled out. Okay, so after forming this change of character, immediately we got another change of character. Okay, price broke below the most recent low with this candle over here. This candle over here, forming yet another change of character. Okay, we've now got that bearish market structure shift. And obviously we had that continuation of bearish market structure to the downside. Now this right here is exactly what we want to see. A deeper drop into the support zone, a deeper retest. This now gives us more confidence to look for buys. After price dropped deeper into the support zone, it proceeded to consolidate. Okay, this right here is consolidation. Price is not really moving to the upside, nor is it moving to the downside. It's just moving sideways. And this here on its own is a sign of a potential reversal. But we're looking for a break of structure. So if we zoom in here real quick, market structure is still bearish. We're looking for that change of character, that break of structure to the upside. So where is the most recent high? This here is the most recent red candle. So this here would be the most recent high. And you'll notice on this candle here, we got a break of structure. In other words, a change of character to the upside. So now we've got that bullish market structure shift, okay? Price wicked above the most recent high, closed below it, but we got a green candle closure. So on this candle right here, we could have gone ahead and opened a 10, 15, 25-minute position, and price just continued to rise beautifully. And it would have been a stunning trade. And all this was a break of structure to the upside. Being more specific, a change of character. Okay, price broke above the most recent lower high, which was this candle here. Okay, we wicked above it, confirming the break of structure. And on this candle closure, we could have opened a buy position between 10 and 25 minutes, and the trade would have played out beautifully. It just goes to show the power of a break of structure. Now, let's move over to the right. Here we have the second retest of this support zone. And comparing it to the first retest, it's not as deep. The retest is not as deep, okay, and that's fine. As long as price is not kissing the surface of the zone, you want to see deeper penetration. This here gives me more than enough confidence to go and look for buys, okay? So if we zoom in here real quick, we can see that we had that bearish market structure with price dropping down into the support zone, okay? So all that we're looking for here is we're looking for a break of structure to the upside, that change of character, which would be a confirmation to us to go ahead and open a buy position. So right over here, we have the most recent lower high, okay? And all that we're looking for is a break of structure here. And on this candle closure, this one right here, price wicked above the most recent lower high, okay? And the candle closed green. So this was a confirmation to us to go ahead and open a buy position on the candle closure. And if we just scoot over to the right, we could have opened a buy position anywhere between 10 and 25 minutes, and the trade would have played out to a T. What about the third retest? As you can see, this here was the third retest into the support zone. And if we look to the left, we had bearish market structure with price dropping down into the support zone. That is evident. Now, this right here is interesting, okay, because we had this bearish market structure with price forming lower lows and lower highs, okay? And this right over here is the most recent lower high. And well, what do you know? On this candle here, we got a break of structure, okay? Price wicked above the most recent lower high. We got that change of character. But the reason why we wouldn't have opened a buy position here is because the candle closed red, okay? So then the price dropped lower, okay? Now this up here would be the most recent lower high, okay? And as you can see, price pushed back to the upside. And right over here, we got a wick above the most recent lower high, confirming the break of structure, confirming the change of character, okay? But once again, we wouldn't have opened a buy position here simply because the candle closed red. These are the type of candles you want to avoid because they will screw you over. We discussed this stuff earlier. Had this candle closed green, that would have been the go-ahead to open a buy position. So if we move over to the right, this now becomes the new lower high. And if we follow price, we got a push to the upside, a pullback, a push back to the upside, and a break of structure. Okay. Price wicked above the most recent lower high, confirming the change of character. Okay. So on this candle closure, we would have opened a 10 to 25 minute buy position. And unfortunately, the trade would have not played out, okay, because it would have closed on one of these candles over here, and that would have been slightly lower than the entry level, which would have been over here. And this here is reality, people. Losing is part of trading. You will lose trades from time to time, and you need to accept that. Sometimes you have the most amazing A+ setup in a support and resistance zone that just doesn't work out. It happens. Using support and resistance doesn't mean that you're immune to losing. Support and resistance are high probability zones, giving you that edge. So when you combine it with a confluence like breaks of structure, it puts probabilities in your favor. So if we take a step back for a moment, we've taken 3 trades off this support zone, and we won the first 2 trades. And that's what it's all about, is winning more than you lose. So we can confidently say the trade we would have taken off this candle here is a loss. Okay, that's clear as day. Now, I'm going to give you guys some advice here. If you lose the first trade or miss out on the first setup, don't hesitate to open another trade. If another setup starts to come together and you're confident, take the trade, but always limit yourself to 2 trades max. So, for example, we would have lost the first trade we took off this candle here, but I'm still confident to look for another trade simply because price is still near the support zone we've marked out. When it comes to looking for another trade, you want to ensure that price is not a million miles away from your zone. If it's still in the zone or nearby, that should give you more than enough confidence to look for another trade. So if we take a look at things here, we got a push to the upside, a pullback, push to the upside, pullback, and another push to the upside. And right over here, we got a break of structure. Okay. Price broke above the most recent high. So this candle over here, we got a break of structure and a candle closure above the most recent high. And this is not a change of character because market structure still remains bullish. So on this candle closure here, we could have opened a 10 to 25 minute buy position, and the trade would have closed somewhere up here on one of these candles over here, and the rest is history. I mean, this trade here made up for the first loss. And looking at the bigger picture, we managed to open 4 trades off the 3 bounces of the support zone, winning 3 of them. I mean, I'll take that every day of the week, winning 75% of the 4 trades we took. And that is the power of using breaks of structure off a support zone. All right, so we just took a look at some examples of how we can open buys off a support zone using breaks of structure. Now it's the opposite. We're going to take a look at how we can use breaks of structure to open sells off a resistance zone. And right in front of us, we have a clear resistance zone right up here. Beautiful. Okay, so the first 2 reactions or rejections happened over here. Just by the way, we are on the 15-minute time frame. So with these 2 reactions we have here, we formed a pretty decent resistance zone. So in total, we had 1, 2, 3, 4 bounces off this zone. And obviously, the first 2 bounces formed the resistance zone. Price then proceeded to drop, pushed back up into the resistance zone, rejected, and pushed back up for the 4th time. So this area right here is the area we'll be using to look for potential selling opportunities. So what we're going to do now is jump over to the 2-minute time frame to look for potential selling opportunities. Right, so this was the first and second bounce off the resistance zone, initially forming it. And right here we have the 3rd and 4th retest of this resistance zone. So we can use these two areas to look for sells. Right here we have the 3rd retest into this resistance zone. Let's take a look at what we can find. Now, price pushed up into the resistance zone quite nicely, following that bullish market structure, forming higher highs and higher lows. In a resistance zone, we're typically looking for sells. So we're looking for one thing. We're looking for that break of structure to the downside. We're looking for that change of character to confirm that market structure shift from bullish to bearish. Now let's take a closer look. Right over here, we have the most recent higher low, okay? And as you can see, we got a break and candle closure below the most recent higher low. So this break of structure to the downside, this change of character confirms that we've got that market structure shift from bullish to bearish. And this is a confirmation to us to go ahead and open a 4 to 10 minute sell position on this candle closure here. Okay, so had we opened a 4 to 10 minute sell position, the trade would have closed on one of these 4 candles here. Worst case scenario, the trade would have broken even had you opened a 8-minute sell position. It may have broken even, to be fair. May have. Worst case scenario, your trade would have broken even on this candle here. But otherwise, the trade would have played out beautifully. Right. Then price proceeded to drop before reversing back to the upside into the resistance zone. Let's take a closer look here. Price pushed up into the resistance zone, kissing the surface. Look at that. Barely moving up into the resistance zone. This is not something we want to see. Okay, we want to see that deeper rise into the zone. So we'd avoid this whole setup here. Okay. Price then proceeded to drop before pushing even deeper into the resistance zone. And this here, this is something we want to see. Okay, we can work with this. But if we look at the bigger picture here, the break of structure, the change of character only occurred down here. Look at that. Because it's so far away from the resistance zone, we would avoid this setup as well. And besides, we got that break of structure and the candle closed green. So we're not taking the trade. The same thing here. Okay, we got another break of structure right over here. But the candle closed green. So we're not taking the trade. Then as you can see, what happened next, price pushed even deeper into the zone. Happy days, right? So now this is something we can work with, okay? This right here is something we can work with. Let's take a look at what we can find. So price ended up pushing even deeper into the zone, which simply gives us more confidence. Now let's take a look at the setup here, okay? So market structure is clearly bullish. We're simply looking for a break of structure to the downside, okay? That change of character. And right over here, this is the most recent low, okay? We have a drop to the downside, a push back up, and a drop even lower. So on this candle here, on this candle closure, we got a break and a closure below the most recent low. So this would have been a confirmation to us to go ahead and open a 4 to 10 minute sell position. What would have happened? This one is a little bit interesting. So realistically, we would have opened a 4 to 10 minute sell position here. These two green candles, this one and this one, Had you opened a 4-minute sell position, the trade would have failed. Had you opened a 10-minute sell position, the trade would have also failed. But had you opened a 6 to 8-minute sell position, the trade would have played out. So it was a 50-50 shot. So let's say we lost the trade due to unfortunate circumstances. We selected the wrong trade duration. Let's look for another trading opportunity. We zoom out, as you can see, price ended up pushing even deeper into the zone before dropping off back to the downside, forming a high and dropping even lower. And if we zoom in here, as you can see, price formed this low over here. We've got a low and a high. And on this candle here, we got a break and candle closure below the most recent low, confirming the break of structure to the downside, the change of character. Okay, so market structure is now bearish. And this is a confirmation to us to go ahead and open a 4 to 10-minute sell position, okay, on the candle closure. And if we zoom out, the trade would have played out and closed down here on one of these 4 candles. And this time, there's no arguing about it. The trade would have played out cleanly. So if we zoom out and just take a look at the bigger picture for a moment, you would have either won the first trade and the second trade, or you would have won the first trade, lost the second trade, and won the third trade. So you would have either won 2 out of 2 or 2 out of 3. And if you ask me, I'm happy with either one, because I've made money either way. Okay, let's get into another example here. Right up here, we have a neat resistance zone. Okay, we have the first reaction, second reaction, and third reaction. Okay, so it's a pretty decent resistance zone. And obviously, on the third push and retest of this resistance zone, this is where we can go and look for some sells. Scrolling back, this is the resistance zone that we marked out. Here's the first bounce, second bounce, third bounce. And if we zoom in here, this area here is realistically where we'll be looking for sells. So we got a drop to the downside and price pushed up into the zone, kissing the surface once again, and this is not enough. We want to see a deeper push into the zone. And that's exactly what happened here. Price pushed deeper into the zone. So we're looking for a break of structure to the downside, a change of character to confirm the market structure shift. So as you can see, price dropped to the downside. We formed this high, okay? Dropped to the downside, formed this high, and then we got a break of structure right here, okay? Price broke below the most recent low. This here was the most recent low. Okay, so we got a break of structure to the downside, and on this candle closure, we could have gone ahead and opened a 2 to 5 minute sell position. On the closure of this candle, that would have been the confirmation. Now, where would the trade have closed if we opened a 2 to 5 minute sell position here? This one is a little interesting. So if we take a look here, the first 2 candles, actually the second and third candle, so these 2 here, had you opened a 2 or 3 minute sell position, the trade would have played out. But had you opened a 4 or 5 minute sell position, the trade would have closed on one of these 2 candles here, and the trade would have been a loss. So if you look at the bigger picture, once again, it was a 50-50 shot. But your trade duration here would determine whether you won the trade or not. It would determine whether you look for another trade or not. So had you taken a 2 or 3 minute trade, you would have won the trade. You step back and say, cool, happy days, I'm going to move on. But had you taken a 4 or 5 minute sell position, you took a loss, that's fine. In that situation, you step back and say, okay, is there another trading opportunity or not? If there isn't, don't force it. Never force a trading opportunity because, yeah, you'll see your ass. Let's put it that way. But if there's another trading opportunity, go for it. Now, let's say in this situation, we just happen to lose the first trade. That's fine. Okay. If we zoom in a little closer here, as you can see, price pushed back to the upside. We've got a low and a high. Okay. And this here is the most recent low. Okay. And as you can see, this candle here, we got a break of structure below the most recent low, a change of character, confirming that bearish market structure shift. So this would have been a confirmation to us to go ahead and open a 2 to 5 minute sell position, and the trade would have closed somewhere down here. A gorgeous, gorgeous trade. I mean, we were fortunate enough to identify an opportunity in and around the zone without forcing it. Okay, we took the trade and the trade played out perfectly. And it's not always going to be the case. Okay, sometimes you take a trade, you lose, and there's just no opportunities that arise for you to open another trade. And in that situation, you have to eat humble pie and take the loss. So if we take a look here, the first trade would determine whether you took the second trade or not. Okay, had you won the first trade, you would have taken your profits and walked away. You wouldn't have taken the second trade. But let's say you lost the first trade. Again, a 50-50 shot. You would have taken the second trade, which you would have won, and the second trade would have more or less made up for the first loss. Okay, so it would have either been a 1 out of 1 or a 1 out of 2. Guys, this is how simple it is to identify incredible trading opportunities using breaks of structure in these support and resistance zones. If you weigh it all up for a moment, if you take a look at all the examples I just showed you guys and the trading opportunities we identified off these support and resistance zones, we won a lot more trades than we lost, far more. And that was simply by executing on the breaks of structure of the support and resistance zones. We were clinical. And if you start to mark up your support and resistance zones properly, and if you know how to identify those breaks of structure and execute on them clinically, ruthlessly, your win rate will increase an insane amount. At the end of the day, it all comes down to one thing. Well, two things actually. Practice and backtest. Go do what I've done here. Scroll back, go mark up your support and resistance zones, identify those breaks of structure. It's only going to help you. And I advise you guys to do that because practice makes perfect. And over time, you'll find that this stuff here all becomes second nature. Now, the next confluence we're going to be taking a look at here, the final confluence, is significant. And it's going to take things to the next level. So you're definitely going to want to stick around for this one. Before we continue into the video, I would like to squeeze in a little promo here. I'm inviting every single one of you here watching this video right now to join my free binary options Telegram channel with over 805 members. We've got an incredible community of people, and in this group, I post tons of tips, tricks, advice, and educational content, such as this one, why you shouldn't rely on indicators. And this will help you expand your trading knowledge, level up your trading game, which is what it's all about at the end of the day. We've got all the bells and whistles. I even post free weekly signals, such as this one on AUD/USD, which I posted just the other day, a sweet 92% payout. Trade with the best and make some money while trading with me, because at the end of the day, that's what trading is all about, making money. Like I said, guys, it's completely free to join. No subscriptions, no fees. All you have to do is head to the link in the description below and join the FX Hype's free channel. Come and join this incredible trading community and start leveling up your trading game. If it's not for you, you can leave at any time. Let's get back into the video. So the third confluence we're going to be taking a look at here is the RSI indicator. So you can locate the RSI in the third column, third from bottom, okay? And we're going to go ahead and add the RSI indicator to our chart. Now, right here, we have the RSI indicator, okay? And what the RSI essentially does is it shows us when price is overbought and when price is oversold. So if the RSI pushes above the blue line here, okay, above the 70 level, price is considered to be overbought, okay? Price has been pushing up quite significantly, and at any point the price could drop because the price is overbought. And the same thing applies here, just the opposite. If price drops below the 30 level, below the orange line down here, price is considered to be oversold. Price has been dropping a lot, so at any point the price could start pushing to the upside. The RSI is an incredible indicator to identify those reversals and pullbacks. Using the RSI on its own is great, but it can mess you around sometimes. It can give you those false reversals and pullbacks, especially during consolidation like this. It's nasty. You don't want to be trading in this. This is something you want to avoid, especially when using the RSI. But combining the RSI with support and resistance makes it super useful. Let's take a look at what we have going on here. So I've gone ahead and marked up this support zone we have here. And this zone has a total of 3 bounces. Okay, the first 2 obviously made up the zone. But if we take a look at the third retest of the support zone, what makes this significant is the RSI shows us that price is oversold. The RSI moved down into the oversold zone, telling us that a bounce or a push to the upside is imminent at any point, okay? Shortly after price dropped down into the support zone, it immediately reacted and started pushing to the upside. And the RSI shows us that it started to move back above the 30 level, off the oversold zone, okay, telling us that, hey, a move to the upside and a continuation forming the swing to the upside is very likely. And we ended up getting a beautiful rise off the support zone. And at the end of the day, the support zone was respected. Right, so the exact same thing applies in a resistance zone, just the opposite. So if we take a closer look at the zone I marked up here, we have 3 reactions, 3 bounces off this zone. And if we take a closer look at the third retest we have here, price pushed up into the resistance zone quite nicely. And the RSI shows us that price is overbought. The RSI moved above the 70 level, telling us that we're in the overbought zone, and at any point the price could drop from here. The price then proceeded to consolidate, as you can see. And consolidation is a sign of a reversal on its own. But that's something separate. If we just go off what the RSI shows us, shortly after the RSI moved above the 70 level, it dropped back down below it, telling us that price is most likely going to continue dropping from here. And what happened? The price dropped beautifully, ultimately respecting the resistance zone. I mean, the power of combining the RSI with support and resistance just goes to show you how incredibly effective it is. I just showed you guys how the RSI works and the influence it has in support and resistance zones. But just remember one thing here. You're not using the RSI on the time frame that you used to mark up your support and resistance zones, okay? So you're not using the RSI on the 5, 15-minute, and hourly time frames. You're only using the RSI when you drop down to the lower time frames, like the 1-minute, 2-minute, and 5-minute time frames when you look for entries. So what is the purpose of the RSI? It's an extra confluence. We're using the RSI as a confluence for entries. You see, using the RSI with support and resistance is great, don't get me wrong. But if you just stop and think for a second, what if you combine the RSI with the other 2 confluences we just took a look at? What if you combine the RSI with breaks of structure or with price action? What would that look like? Listen, this is taking things to a whole new level because the more confluences, the better. I want to show you guys what I'm talking about here. So let's get into some examples. Okay, so we're going to start things off by taking a look at how we can combine the RSI with price action. But before we get into that, I want to show you guys a beautiful example of an area of interest. This zone that I just marked up here on the hourly time frame is a stunning example of an area of interest, okay? It initially started out as a resistance zone with the first two rejections we have here, and eventually it turned into an area of interest because it turned into a support and resistance zone. It's been used as support and resistance. And take a look here. I mean, it just doesn't get better than this. My word. So I'm going to be using this zone to show you guys some examples of how we could have used the RSI and price action to open buys and sells. Now I've just switched over to the 5-minute time frame. And this here is the first retest of the broken resistance zone, now support. We're using price action and the RSI to look for buy entries. So we're looking for two types of candles. We're either looking for a bullish engulfing candle or a bullish rejection candle. And if we zoom in closer, this candle here engulfs the previous candle. Okay, so that's confirmation number one. Confirmation number two comes from the RSI. As you can see, the RSI is below the 30 level in the oversold zone. And on this candle closure, the RSI starts to move back above the 30 level, confirming that price is most likely going to continue moving up from here. So on this candle closure over here, we could have opened a 10 to 25 minute buy position. And if we take a closer look at how the trade would have played out, had you opened a 10-minute buy position, the trade would have closed over here on this candle. That would have been profit. Had you opened a 15-minute buy position, the trade would have been a loss because it would have closed below your entry. Had you opened a 20-minute buy position, the trade would have broken even. And had you opened a 25-minute buy position, the trade would have closed in profit. So if you weigh it all up, you had a 50% chance of winning the trade, a 25% chance of losing the trade, and a 25% chance of breaking even. I don't know about you, but that is putting odds in your favor. And if you look at the bigger picture, the price ended up rising quite nicely off this support zone. Price then proceeds to drop down into the support zone once again, retesting it for the second time, which means we can look for more buys. So if we take a look here, right over here we have a bullish rejection candle. Okay, we have a long lower wick, a small body, and a small upper wick. So that's confirmation number one. And here the RSI shows us that it dropped down to the 30 level into the oversold zone, which means that price is very likely to continue moving up from here. So on this candle closure, as you can see, the RSI started moving off the 30 level to the upside. So price is probably going to rise from here. So on this candle closure, you could have opened a 10 to 25 minute buy position, and man oh man, the trade would have closed on one of these four candles here, and all I can say is this would have been beautiful, beautiful profit. Here we go again. Price drops back down into the support zone, nicking the surface. Okay, this right here is not convincing. Even though the RSI shows us that price is oversold. Ideally, we would be avoiding a setup like this because we didn't get that deeper drop, that deeper retest of the support zone. Now, this one here is a little different. Okay, price drops down into the support zone. Not really a convincing retest, if I'm being honest, similar to the previous one. But if we take a look at the RSI never dropped down to or below the 30 level. It never dropped down to that oversold zone. So we would avoid the setup. Keep in mind, if the RSI doesn't drop into that oversold zone, we avoid the setup at all costs. Always remember that. Okay, so we just took a look at some examples of how we can use price action in the RSI to take buys off support zones. Now, right in front of you, here we have a clean break of the same support zone, the same area of interest I marked up at the beginning. Okay, and as you can see, we got a continuation of that bearish market structure to the downside, confirming the break. And if we move across, right over here, we got the first retest of this resistance zone, former support. Now, if we zoom in a tad bit closer here, we got a decent retest of this resistance zone. And right over here, we get the first confirmation. We got a bearish rejection candle. We got a long upper wick, a small body, and a small lower wick. What does the RSI show us? The RSI shows us that the price is overbought. It's above the 70 level. Okay, so that's confirmation number 2. But hold your horses for a moment. What makes this setup significant is the fact that the RSI doesn't start dropping below the 70 level. It doesn't show us that the price is going to start going down from here. It still remains very much above the 70 level. So we would avoid this setup. We need to see the RSI drop below the 70 level to tell us that the price is most likely going to continue dropping from here. Look, if it means I'm going to avoid taking a loss, I'm totally cool with that, man. Seriously. But let's see if we can find another trading opportunity. So we missed out on this one here. That's totally cool. Here it looks like we get another bearish rejection candle. Okay, we have a long upper wick, a small body, and a small lower wick. And this time, check this out, the RSI shows us that the price is still considered to be overbought, okay, but it's starting to drop below the 70 level. Okay, so we have confirmation number 1, the bearish rejection candle, and we have confirmation number 2, the RSI dropping below the 70 level, telling us, hey, price is probably going to continue dropping from here. And if we take a look at it, had we opened a 10 to 25 minute sell position here, the trade would have closed on one of these 4 candles here. And that would have been sweet profit. So moving on, right here we have the second retest of this resistance zone, which means we can look for more sells. Price taps into the resistance zone right here. And this is a decent retest once again. It's not great, but we can work with it. We can work with it. If we take a closer look, we get a bearish engulfing candle here. Okay, this candle engulfs the previous candle. And as you can see, price tapped into or above the 70 level into the overbought zone. And immediately after forming this bearish engulfing candle, the RSI starts to drop below the 70 level, telling us price is probably going to drop from here. And well, what do you know? We could have opened a 10 to 25 minute sell position here, and the trade would have closed on one of these 4 candles here, and at the end of the day that would have been profit. But let's just say realistically you decided, nah, I'm not going to take the trade because the price didn't push deeper into the zone. Let's see if we can find another opportunity. So shortly after pushing up into the zone, we got a small pullback and then price pushed even deeper into the zone. Okay, this is beautiful. We can work with this now. This is what we want to see. Okay, so if we zoom in a little bit closer here, we get a push into the zone. And right over here, we get somewhat of a bearish rejection candle, but I'm not too convinced by this because the body's a little bigger than I would want it to be. So I wouldn't look for trades off that candle. But the following candle engulfs, this candle right here engulfs the previous candle. So that's confirmation number 1. And the RSI shows us that it's above the 70 level And after forming this candle here, it starts to drop below the 70 level, telling us price is most likely going to go down from here. So we've got the two confirmations, and on this candle closure here, we could have opened a 10 to 25 minute sell position, and the trade would have closed on one of these four candles here. And that would have been right on the money. I mean, this is just incredible. Sitting here, backtesting, showing you guys the difference it makes when you combine two confluences, like the RSI and price action, the incredible setups you can identify, the profits you can make. Boy, don't even get me started. I mean, this is just giving you a little taste. But yeah, that covers some examples of the RSI and price action confluence combo. Next up, we're going to take a look at some examples of how we can take trades off support and resistance zones using the RSI and breaks of structure combo. Let's get into it. All right, so right in front of us here, we have clear support and clear resistance. Down here, we have a clear support zone. Beautiful. And up here, we have clear resistance. Each of these zones has multiple rejections, multiple reactions, okay? 3 rejections off the support zone and 3 rejections off the resistance zone, making these pretty respectable zones. So I've just marked up support and resistance on the 15-minute time frame. So what I'm going to do now is jump over to the 2-minute time frame to look for potential entries. So I've just jumped over to the 2-minute time frame, and we're going to start things off by taking a look at buys off a support zone. So if we zoom in a little bit closer here, this was the third retest of this support zone, okay? So we've already got the first confirmation. Confirmation number 1, price is in a support zone. So the second confirmation we're looking for is a break of structure, okay? If we take a closer look here, right over here, we got a break of structure with this candle here, okay? We got a break of structure and a candle closure on this candle here. So that's confirmation number 2. And if we go down to the RSI, we can see that the RSI dropped down below the 30 level into the oversold zone. And on this candle closure here, the RSI started pushing up off the oversold zone. Okay, so that's confirmation number 3. Now in this situation here, we could have opened a 4 to 10 minute buy position on this candle closure here. 4 to 10 minutes, okay? So had you opened a 4 to 6 minute buy position, the trade would have closed on one of these two candles here. That would have been profit. Now, had you opened a 8 to 10 minute buy position, the trade would have closed on one of these two candles here, which would have been a loss. So in this situation, it was a 50-50, and that's not bad if I'm being honest. Sometimes you're going to make the right call, sometimes you're going to make the wrong call. But let's just say now for a moment that you did take a 8 to 10 minute buy position. You would have lost the trade, right? So in this situation here, we can look for another trading opportunity. Now, we can confirm that the price is still within the support zone, and the RSI is already pushed up off the oversold zone above the 30 level here. So price is probably going to continue going up. So all that we're looking for here is a break of structure. And what do we have here? We have a break of structure. And this is perfect because the price is still in the support zone. Now, if the price is slightly above the support zone or slightly below it, that's still fine. Okay. So we get a break of structure and a candle closure. So on this candle closure here, we could have opened a 4 to 10 minute buy position. And the trade would have played out on one of these 4 candles here. And this time we would have won the trade. Let's zoom out and take a look at things here real quick. Had you won the first trade off the break of structure we have here, realistically, you're walking away, profit in your pocket, happy days. That's 1 win out of 1. But had you lost the first entry, okay, naturally you're going to look for another trading opportunity, which you would have taken off this break of structure here. That trade would have played out, and that would have been 1 win out of 2, and you would have walked away with a small loss. But keep in mind that you're realistically not going to take a trade if the payout is crap, okay? And that's just logical. Now, here we have another example. We're back on the hourly time frame, and down here we have a beautiful, gorgeous support zone. We have a total of 3 bounces once again. So it's a pretty sturdy support zone. So what I'm going to do now is jump over to the 5-minute time frame to look for potential buy entries off this support zone. So I've just switched over to the 5-minute time frame. And here we have the first bounce. If we move across, right over here we have the second bounce. And here we have the third bounce. So on the third bounce, the third retest of the support zone, we're looking for buys. Okay, so confirmation number 1, prices drop down into the support zone. The second confirmation we're looking for is a break of structure. And right over here, on this candle, we got a break of structure and a beautiful closure. So confirmation number 2, we can check that box. So what does the RSI show us? What does the RSI tell us? Okay, we can see that the RSI dropped down below the 30 level into the oversold zone for quite a while. It was hanging around there. But as soon as we got that break of structure here, okay, on this candle closure, as you can see, the RSI started to push up off that oversold zone quite beautifully. So we've got all 3 confirmations. On this candle closure here, we could have opened a 10 to 25 minute buy position, and the trade would have closed on one of these 4 candles here. And I tell you what, that would have been a beautiful trade. Yeah, I mean, those were some great examples of how we can take buys off support zones using a combination of the RSI and breaks of structure. So next up, we're going to take a look at some examples of how we can take sells off resistance zones using the RSI and breaks of structure combo. Right now, we're on the Euro GBP pair, and we're on the 5-minute time frame. So I'm going to go ahead and mark up this resistance zone we have right here. And as you can see, we have a total of 4 bounces off this zone. So what I'm going to do now is jump over to the 1-minute time frame to see what sort of trading opportunities we can identify. Okay, so we've just switched over to the 1-minute time frame, and here we have our resistance zone. This was the first rejection, second rejection, and here we have the third rejection. So zooming in a bit closer, the first confirmation, check. Price is in a resistance zone. So the second confirmation we're looking for is a break of structure. Okay, we're looking for a break below the most recent low. And here we have the most recent low. On this candle here, we got a break of structure. So confirmation to check. Now, what does the RSI show us? We can see that the RSI pushed up above the 70 level into the overbought zone. Okay. And as soon as we got that break of structure, as you can see, the RSI started to drop below the 70 level off that overbought zone. And that would be confirmation number 3. So on this candle closure here, we could have opened a 2 to 5 minute sell position, and the trade would have closed on one of these 4 candles here. And that would have been profit. So overall, this was a solid trade, a nice W. If we move over across, here we have the 4th retest of this resistance zone. So we can look for another trading opportunity. Confirmation number 1, price has moved up into the resistance zone. So here we're looking for a break of structure. We're looking for a break below the most recent low. And right over here, as you can see, we get a clean break of structure here. This is the most recent low. So we get a break of structure on this candle here. That's confirmation number 2. Okay, and the RSI shows us that the price was way overbought, way above the 70 level. So that's confirmation number 3. Well, somewhat. Okay. Once we get that break of structure, as you can see, the RSI starts to drop below the 70 level, off that overbought zone. This would be confirmation number 3, check. So on this candle closure over here, we could have opened a 2 to 5 minute sell position. And if we take a look at the bigger picture, okay, had you opened a 2 or 3 minute sell position, the trade would have closed on one of these 2 candles here. And that would have been a loss. That's why I suggest that you guys stick to 4 to 5 minute sell positions. If you're trading off the 1 minute time frame, 4 to 5 minute sell positions is advised. It's for situations like this, because had you opened a 4 to 5 minute sell position, the trade would have closed on one of these 2 candles here, and you would have made money off this trade. Look, it's incredibly important that you guys are consistent with your trading times. If you like opening 4-minute trades, stick to that. If you like opening 5-minute trades, stick to that. Find what works best for you. Find that sweet spot and stick to that. Consistency is key. Yeah, it just doesn't get simpler than this. I mean, this resistance zone that we marked up gave us some incredible trading opportunities, specifically off the 3rd and 4th retest we have here. Do you guys see the power of Confluences? The difference it makes? I mean, each concept individually, price action, breaks of structure, the RSI, it's great on its own. But when you combine them together, it just takes things to the next level. I would strongly advise that you guys use a combination of price action and the RSI, or the RSI and breaks of structure, to give you that edge when taking buys and sells off support and resistance zones. I mean, just with a little bit of backtesting I did in this video, using these concepts, we were able to identify some incredible setups. Don't get me wrong, this stuff can be intense and overwhelming at first. I know. That's why it's important to take things step by step. Mark up your support and resistance zones. Look for price action and breaks of structure off these zones. Then later at some point you can start adding the RSI confluence to this stuff. And then over time things become so much easier. It becomes like second nature, just with a little bit of practice. But yeah, I think this was a very nice follow-up video from the previous video I created. Obviously, in this video, we went into detail on how to take trades off support and resistance zones using the confluences we looked at. And this video is slightly lengthier than my previous videos, don't get me wrong. But there's a very good reason for that. I think it's important to go into detail, especially when explaining something or wanting to get a point across, you know. But otherwise, I hope you guys enjoyed the video. And if you did, go ahead and smash a like on the video and subscribe to the channel if you are new. And I will see you in the next video.